Good morning, profit traders. This is Rick with Hit Run Candlesticks. Today's date is December 27th. We've got about 30 minutes before the market opens. I want to thank everybody for being here. I do appreciate it. You know, I know people get tired of hearing this. I really do. But you don't have to trade on any particular day. Now there's traders out there that are gonna just rock the boards, and you're gonna make money. And then there's gonna be traders try to follow those traders, and you're gonna end up losing money. I think we're in a serious chop area, serious area where the market really doesn't know what it wants to do. A lot of confusion out there, so be careful with your trading. Remember, you don't have to trade. You can wait, you can be patient, and you won't have to be patient very long. You know, we've just got the whole end of the year thing going here, the whole Christmas holiday thing going. We've got the whole fiscal cliff thing going. It's just, there are times to back out of the market, and I can't stress enough that just might be one of them. So trade a little light. Trade a little light. You might actually make some money doing that. At least save some money. Okay, let's take a quick look at the market here. Gigi, I want to say thank you for all your posts here this morning, answering a lot of questions there for everybody in your charts you put out there. Thank you very much. Okay, if we take a look at the SPY, let's start with T-line chart. That's the first thing I want to start with. We are in a short-term downtrend. We are still in an intermediate uptrend, but it is extremely close to breaking down. And the candlestick signals right now are still pointing to the downside. For those that don't know, the intermediate trend is simply what is the T-line, this black line, doing in relationship to the 34 EMA. That's the 34 EMA, the orange line. And you can see that we're still in an uptrend. Looking at that, anytime you've got the 8 above the 34, that's what I consider in an uptrend. But look what the short-term trend is doing, and that's the 2 EMA right here in comparison to the T-line right there. And it has now flipped to the downside. From here, it went from down and it flipped to a nice trend to the upside. Even right here, we just had one little candle down and then back up, forming a bullish morning star. The moving averages never flipped to the downside, to the bears. Well, now they are. And now we're coming dangerously close of the T-line coming down through that 34. And the price action, the candlesticks, aren't giving the bulls a lot of warm and fuzzies. Not yet, anyway. Now, could it be today? Absolutely. It could be today when the bulls start giving us a lot of warm and fuzzies. But until that happens, I think it's best to go with what the chart is doing. The chart right now pointing to the downside. We're trading below the T-line, bearish engulf off of doji. Yes, the almighty 50-day simple moving average is acting as support. But for every time somebody says that, please look to your left and look and see how many times the 50-day simple moving average acted as support and then broke down. So just because it's there does not mean that that's a turnaround point. That is a condition, not a reason. When I say a reason, I mean a reason to buy. You need a reason to be long. You need a reason to be short. Where we're holding up on the 50, that's not a reason. That's a condition. Stochastics. A lot of people look at stochastics. Just because stochastics is oversold, which by the way this is not, that is not a reason to buy. That is a condition. You still need a reason. Okay, before I get off on my soapbox here, I better get going. Gigi pointed out, let's see, On the NASDAQ, here's the NDX. Um, Pointed out where we've got that death cross, uh, where the 50 is coming down through the 200-day moving average right there. So you can see where that whole trend right there is starting to move. If you look at the chart, look at that chart. That's just got bearishness written all over it. Um, a high, we've come down and made a low, we've come down and made a lower high, and it's rolling over. So have some caution out there. Have some caution. Okay, let's look at some stock picks today. We'll start with the first one on the list. For no good reason, they're not in any particular order. I think we should keep our eyes on RIMM. I know a lot of people earlier were trading RIMM, and if you look at RIMM, kind of a longer view here, you can see a beautiful rounded bottom, rallied up. But you know, we always know there's going to be profit taking and a pullback, and that's just what's happened. It got a little ahead of itself, and now it's pulling back. And you can see this chart pattern. It's just a great looking chart pattern right here. We've got a Morningstar signal. For those that don't know what a Morningstar signal is, right there, where we have a bearish candle to the downside, a doji, and then a bullish candle here. What are we looking for? We need to see strength above, about right in there. So above the T line is what we want to see strength. And then, of course, we need to see strength follow through from the swing high over here. That's on RIMM. APPY. APPY. I think there was a couple people in the room trading this. Thanks for posting this out yesterday. I wrote it down, looked at it, and decided it was worth a watch list today. Very, very nice chart. If you're in it, thumbs up already. Again, thanks for the trading room and the input there. Little cradle pattern forming here. We have a little cradle pattern. Cradle pattern is when we have a down move, we have some sideways trading, and then an up move, kind of a U cradle pattern, whatever you want to call it there. And then all of a sudden, we have this flagging right there. What we're looking for is a breakout. That's where we want to be long. Aggressive traders, you can certainly be buying on any kind of an inside day. If it starts breaking down this direction, pretty much below this black line right here, you probably want to be out of it. There's just no reason to be in it. There's no reason to say, well, it looks like it's going to have support down here at the 50-day moving average. That's a load of nothing. Looks like is not fact, and looks like is just simply you giving your money away. So rather than saying it looks like it's going to have support because you have no earthly clue, a better way to say it is, well, it looks like I'm going to lose some money. So maybe we ought to try doing that, and then we'll pick up some money in the end, because that just doesn't sound right. Looks like I'll be losing some money. So it's probably best, if it starts moving down through this area, just go ahead and get out. You can always buy it back. Okay, next chart we have. How about a little MTG? I think MTG is setting up. Of course, we need to see some follow through. I wouldn't be afraid to trade this on anything above the 200-day simple moving average. Obviously, you're looking for strength to the upside. So if it starts trading below that 200, what's that telling us? It's telling us that it's not moving up, or it's not ready. Either case, we shouldn't be in it. If it starts moving too far down, what are some possibilities? Well, it could stop right in here, could stop right there, or it could move down into the 20, the 34, or it could move down to the 50. So rather than see this move down and say, well, I think it's going to have support right here. Now, if you can afford that loss, okay, that's cool, that's fine. But rather than saying, I think it's going to have support right here, maybe the thing to do is say, it looks like I'm going to give some money away. Because that's usually what happens. When a chart starts moving down, if we do not see a reversal signal, it just keeps moving down and down. I get reports on this all the time. And then all of a sudden, you know, somebody gets in trouble, it's like, man, I've lost too much money, I don't know what to do. Well, rather than saying things like, it looks like, because the truth of it is, you have no earthly clue. You don't. As much as you think you do, you don't. You do not know that it's going to bounce from this area, or if it's going to bounce from this area or this area. We just don't know those things. Sorry to be so forceful in that, but when I get phone calls during the day, somebody saying, Rick, I need some help, and I say, why? And they tell me what's going on. Believe me, I care, I try. You can ask them. I'm not always nice about it because I'm trying to plant that seed where it is a heck of a lot easier to take a $25 loss or a $50 loss or a $100 loss than it is to take a $500 loss. Or sit with this forever while it's just bouncing around and going nowhere, and it drives you crazy each and every day. So let's just play the charts, play the signals. When you see a sell signal, we need to be out. Okay, I'm on my soapbox today. Had lots of coffee this morning. AVEO, this is one of our stock picks on yesterday's watch list. It's acting good, so I think if anyone's long this, you can still be long. Looks to me as like it's got more upside to it. The likelihood of it going straight up, I think, is pretty slim. I think that probabilities are that it gives us some sort of a pullback. Where that pullback is, we just don't know that. So, and I'm not saying the pullback is going to be right now. I've got no idea what it's doing pre-market. But if we see the sell signal up here, and we can expect some consolidation, you might consider taking some profits off. Definitely raise your stop up. If it does start pulling back, it doesn't mean the chart is bad. It just means there's some profit taking. Any kind of a pullback, as long as it stays above this area, about right there, I would think this chart is still in good shape, and we're still looking at the 200 as our target. We just need to see that reversal signal that takes it back up. On the other hand, if today we start trading pretty much above that level right there, we want to be long and continue to trade it up as long as it keeps moving up. Another one is ANR, metals and mining. That's pretty good looking chart right now overall. So there's a couple of metal stocks here. ANR is one of them, metals and mining. Let's see, where am I? There we are. This was a featured stock pick back here. It rallied to the 200 like it should be doing, and this is what I mean by a chart rallies up. We know it's going to have profit taking. This is definitely where you want to look at taking some profits at a major moving average, a resistance area. When you've made this kind of money, why not take that money off the table? And then all of a sudden we start seeing these red candles with these wicks on there. That tells a story. That tells that we're seeing a little bit of a pullback. So now what do we see? We've got, starting with this red candle here, down we go. 1, 2, 3. Notice the hammer. A little hammer. Hammer is not a reversal signal. Please keep that in mind. A hammer is simply hammering out the bottom. Now, I'm sure there's some people that can hammer a nail in a 2x4 with one whack. I can't. I actually don't know anybody that can, but I'm pretty sure somebody can. So what I'm trying to get to here is, if we're trying to hammer out the bottom, it might take 1 or 2 whacks to create that bottom, but before we start moving up. So there's the hammer, and we'll count that as one whack on the nail. Well, there's another whack on the nail, and here's one more whack on the nail, and now it broke out over the top of the hammer. Now we can start looking at this, and this is how we start a little J hook right here. So ANR, nice rally up, little pullback, starting a J hook. Let's do this. Let's shrink this up. What kind of potential? What does that chart look like? That's a beautiful rounded bottom chart here. Upside potential, I would say in the $14 range, $17 range, then up into the $18 range. Plenty room to move up. So we want to be trading this on any strength. I think if you, let's see here, from about right there down, I think anywhere in here is a buying opportunity. Anything below these lows is a stop. Of course, if you buy it at the very high, say right in here, you might not want to put your stop right there. That just might be too far down. So there we want to put our stop up. Following the T-line rule works pretty nice. It appears that the 200-day moving average is resistance. So if it does move up, and say you buy it up here, if the 200-day moving average is resistance and we broke through it, then that would mean that the 200-day moving average is now support. So if it comes back down through your support area, there's no sense in the world holding it. What it means at that point is it's not ready to go. It's not ready to stay up there. So if you buy it here and it closes back through the 200 today, tomorrow, the next day, get out of it. Save your $25 or spend your $25 or the $50 or $100. It all depends how much you put in the position. Spend that money and consider it a good loss, because if it's not ready and it wants to pull back further, what happens is, say that $100 loss, it now down here, it now turns into a $200 loss, now a $300 loss, and I know it's going to happen. I know it's going to happen because I do it too. We're all traders and we all do similar things. And what we see is, oh look, I'm at a, say, a $300 loss. We could have support right there, so I'm going to hold it. And then it breaks down through that support, and you know what we do? Then we start looking at these moving averages right here, and we say, okay, all right, I'll hold it because now we're moving down here. Well, now you have a $500 loss. And then before you know it, it breaks down here, and now you're dealing with something down here. And I have no idea what that loss is going to be, but it's going to be expensive and it's going to be painful, and you're sitting there fighting it and wondering what in the world I should do. So simply be happy with the small losses. That's part of trading. It's part of the business we're in. Is we've got to accept those smaller losses. If you don't, they turn into big ones and they turn into nightmares. You end up marrying the stock, and that's not good, because the divorce is horrible. So mind those stops. Don't be afraid to take those small losses. ACI, another mining stock here that I think is setting up. Couple little dojis. Notice how we came right up to the 200, doing that same old dance right here. Now we're pulling back. We've got two dojis, a little gap up bullish candle, forming a little bit of a bottom right here. What do we need to see? We would like to see strength, and we just need to see that strength come over these tops. Anything over the 200 I would be happy with. Not afraid to buy it on any kind of move today, as long as it shows some bullishness. If I made an entry, say yesterday, at the close, that would be my stop at this doji low right here. If I make an entry up here today, well, that's not going to be my stop. That's way too far down there. It's hit resistance, it's pulled back, and if it comes through resistance, that becomes my support area. Now I can afford that. I can afford that loss right there. So close back below the 200, I'm out. The last one I have, take a look at AA. Look at this chart right here. I didn't know this had earnings coming up. Gigi pointed it out earlier. I mean, look how we've moved down. We've put in a reversal signal right here. Now we've rallied up right up to the 200-day moving average, and shazam! I hope that's not a surprise to anybody. Look at the pullback. We get some profit taking. After 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, I don't know, 20 days? After 20-day T-line run, we approach the 200-day moving average, and we have a little bit of profit taking. Please don't anyone tell me I'm shocked. You shouldn't be shocked. This is normal. When you see it moving up like this and you've watched it for this many days and you haven't been in it, and all of a sudden it starts making this candle, this is not the time to be in it. This is not. This is the time to say, patience, grasshopper. We're going to do a little bit of profit taking. And sure enough, we do. We land on the big three, the 20, the 34, the 50. Looks to me like we're putting in a little bit of bottoming action right here. And now we have a little move up over the T-line. We have the start of that J-hook right there. If we take this and let's just do something like that, that's what we're looking for at this point. Any kind of a buy up higher, I would not use this as a stop. That's too far down. I would simply use the T-line. If it happens to gap up, once again, I've got no idea what it's doing pre-market. Maybe this thing gaps up. I don't know. If it does, oops, wrong one. Here we go. That's what we're looking for our support area. So, okay. A lot of bullishness there. Let's look at some shorts. MRK. I've been talking about MRK being a short for the last week or so. This still looks like it's looking short to me. We've got a blue eyes failure up here. It's been moving down. Any kind of rally up, I would still look at this being short unless it starts taking something out like that. If it rallies up, probably still looking at something down. Today, I would short any kind of weakness below this low right here. Another one that I see as a short is Walmart. Walmart's another one we've talked about over the last week or so being a short. Another blue eyes failure here. We're coming down like we're supposed to be. We're almost down through this low right here, and through this low here I would certainly be short. If we see a little bounce, don't get excited, don't be a bull. I just don't think it's going to work out so well. Not until we start making some higher highs, and right now all we're doing is making lower lows. So any kind of a bounce, I would start shopping for another short, looking for this to move a little bit further. Walmart, I see something, I don't know, we'll 62, 60, right in this here 58 area maybe. So Walmart's still down. Okay, that's it, and I've got 5 minutes to get going here. I want to thank everybody for being here. I do appreciate it. Thanks for allowing me to get on my soapbox this morning. Be right back.